59.98 pass. Where's the trading right now? Maybe we should have bought it as soon as he stopped talking.
Right. There's all that liquidity above too. We still got 1,200 on the offer. 998.
Morning.
Still below our entry.
So this is the 9 o'clock, from 9 to 10 o'clock. Let's see how we do it. New York Open. Looks like we have a winner here. I came out earlier. I was up about 700. I lost that. I was minus 1,100. I placed an order for 10 to go short. I went against the grain, and I got a good trade, which covered everything. Well, not everything. I was minus $41 from 1,100. So that's a winner. And then I went on this candle prior to opening this here. I went on this candle long, and I got this, but my internet went down, and I had to end the section. So now we're back. Good morning, good afternoon, good evening. Welcome to ABS Phoenix Trading live from Cali, Colombia. Yes, sir. Support my channel by subscribing, by hitting the like. Tell me what you like, what you don't like, where you're from, and what I can do to make me a successful trader. Thus far, this is what I know. I'm throwing it out there. Anybody that's bigger and than I am in trading, by all means, comment what I can do, what I should do, what to change, to add, to work on, to delete, to add, all of that. So I had some levels. Let's see if they're still going on. Yeah, right here. Let's see if this thing transfers to this is from earlier. Let's see if he does it. Because it's weird. Because when you change like 4 hours, where is it?
But does that mean
it disappears?
Read the first two books.
It's weird. It disappears. It disappears. Check that out. So I'm gonna delete these. No, I'm not gonna delete them. But it disappears. So I guess it's something to do with.
We'll figure out how to gain an intuition around.
Let me
around
see.
tempo, around momentum.
Let me see something.
Based on the information that profiles are providing.
If I throw it all over here, I'm just gonna have a floating chart, just like on Take a Swing, floating chart. Let's see. 4, gone. 1, gone.
There were a lot of folks that
3, gone.
Profile. He uses both.
Freaking
He uses both. The volume.
Let me see here.
He's trying to get that intuition around tempo, around momentum, and
there.
other references are based off the TPO or the market profile. And
1 hour.
Just a little bit.
Gone. No, it's not gone. It's here. Okay. Getting better. Getting better.
He doesn't really view the initial balances of
getting better. Okay, so it's somewhere here.
Look at every day.
To bring it on to what is the 15. Actually, I cannot put it here.
For me, but I want to have everybody listen to this and be able to absorb that. Be a lot.
You need to do an audio book on this. I need to do that.
The audio book, really?
I think you would be the perfect judge.
Soothing sounds of John Logan.
I appreciate that. I'll do that to say, look,
I was excited to hear Dalton talking about that volume, the last time he was on. You know, it leads every trading decision that I made.
Yes.
And, using ETO profiles for levels, because we know how great those levels are, and then reading the flows at those levels. So, all right.
Well, the news, we don't need it no more, but let's just leave it there.
Oh, no. No, it's a golden price is an advertising mechanism. But, volume drives.
He disappears.
price.
Let me see here, floating, there's gotta be one.
Without volume, you're not going anywhere.
Anchor text, that's what it is, anchor text.
By two-sided trade.
Pull out.
Those horses, the-
Comment.
All right. Trade.
Price
It's out of balance, that's when you get your good trend days.
Did all of that trading last
Continue.
night. And we're totally obliterated this move. Did get this move,
Okay, let me see, what are we doing here?
So.
Looking to trade. We gotta wait for the open. For the open. Oh, let's look at the account. The real account is at zilch. 746. Can I make money to pass this Columbine? I don't know. I don't know, ladies and gentlemen. But all I know is that I will try my best.
We're still sitting in the 1.1. He exited one lot at 69.77.
We got about 5 more minutes here, and we're gonna take a break and go fast markets.
We'll see.
Today's fast markets, number 56 on the big. Okay. Coach Jay will be trading it up also. Yes, same Coach Jay. Who's who? Reed. Well,
We'll see.
got Nick for a kick, and then his Dan Red yesterday, but they'll keep jabbing away. Very glad.
Not messing with it.
Yes, Coach Jay. You've seen her with us all morning.
Maybe around here this afternoon, it's not that chicks up. I missed the big move yesterday. And that's the thing, I can't sit there and do it all day waiting for something. I got other things.
Do it again today. And Marie?
If it doesn't work out, it's true.
You're joining us around 9:30 today.
But,
So that's.
it is what it is.
End off the football back to you guys.
It is what it is.
Jay, it's been an absolute pleasure having you with us here. I hope we do this a lot more often. As always, but before you start trading, make sure you take a peek at this. Remember to stay all over it, incentive in trading today. And always, pray for peace. Great pleasure having you with us today, Jay.
Thank you for having us, guys. See you in a little bit, but great trading so far to start the day. Let's keep it going.
Awesome. So we did bring down a breaking out of the gold opening range trade, but we are looking at all that right now. Everything seems to highlights got a run. And I'm just frustrated with them. So the chief came in and slapped the market down. That I just we're still making money on the trade. And all in, I'll keep you guys I sit here the whole time with it doesn't move a damn thing. So I'm like, I gotta go.
Thanks. Coming up here, don't run away. Who was that last week?
It's possible. But thankfully,
Trader in town. Indiana's gonna be talking about it.
we're on that group.
Where's your dad? Line. And the game. Jordan, the dynamic blew up on me and.
I'll be happy.
JD, any closing comments here?
Trade well, friends. Try and catch a river. Got one on the crude oil. And I think I just too small. That's fine. All right, guys. Have a great trading day. I'll be dropping in later with some stats and whatnot. So,
Cool, man. All right, surprise on the prize here. We're gonna take a little time out. I need you guys at the coffee machine. Don't go fast. markets coming up.
Stay tuned. We'll be right back. Well, actually, when I get to my appointment, I'll try to log in. I might be able to log in and get on Zoom, log into the video.
That'd be for us too.
Maybe we watch it. If anything,
The channel. If you're serious about mastering trading and taking your performance to the next level, then you've come to the right place. Today, we're diving into a game-changing book, Psychology of Trading by Brett and Steve. Now, I know what you might be thinking. Trading is all about the charts, strategies, and the numbers. Well, yes, but it's also so much about the mental game is just as important as the technical skills. That's what this book is about. Helping you understand the psychology of trading so you can take control of your emotions, manage stress, and build a mindset that leads to long-term success. So, if you want to unlock the mental tools that top traders use to stay focused, disciplined, and calm under pressure, make sure you stick around till the end of this video. Don't forget to hit that like button, subscribe, and turn on notifications so you never miss out on tips that could change your trading game forever. Let's dive in. The fascinating world of trading psychology, straight from Brett and Steve Barker's powerful book, The Psychology of Trading. We're kicking things off with part 1, specifically the introduction. Trading psychology and the performance curve. So, buckle up. This is where the game of trading truly begins. Not on the charts, but in your mind. Let's start with a simple truth. Psychology is the heart of trading success. Think about it. Trading isn't just about strategies, indicators, or market news. It's about how you, the trader, react under pressure. Steenbarger makes this clear right from the start. The biggest challenge traders face is often their own emotions. And guess what? That's something we all can relate to, right? Fear, greed, overconfidence, they're universal emotions. But in trading, they can be the difference between a winning streak and a blown account. Why psychology is so important? Here's the thing. You could have the best trading strategy in the world, but if you can't manage your mindset, you'll struggle to execute it effectively. Steenbarger introduces this idea with the concept of the performance curve, a tool to understand how emotions influence our decision-making process. Picture this curve as a bell shape. At the peak of this curve, you're in your zone, focused, calm, and making rational decisions. But if you slide too far in either direction, things start falling apart. Too much stress or excitement, you're prone to impulsive decisions. Too little emotion, disengaged, and missed opportunities. Striking that perfect balance is where the magic happens, and mastering this balance is what separates successful traders from the rest. The role of emotions in trading. Now, let's talk about those emotions. Here's an example. Imagine you've just taken a big loss. What's your first reaction? Maybe it's anger or frustration, or maybe it's panic. You feel like you need to recover that loss right now. This is where most traders go. They jump into another trade, not because it's a good opportunity, but because they're chasing the money they lost. That's called revenge trading. And trust me, it rarely ends well. Steve Barker stresses that emotions like fear and greed aren't just problems, they're signals. Fear might tell you there's risk you haven't accounted for. Greed, it might mean you're overconfident, over-leveraged. The key is to listen to these emotions without letting them control you. Easier said than done, right? But it's possible, and that's what will keep you slow. The performance curve in action. Now let's bring it back to the performance curve. Think about your best trades. What mindset were you in? Chances are you were calm, confident, and focused. That's the sweet spot, the top of the performance curve. But here's the catch. Emotions don't stay static. 1 minute, calm and rational. And the next, you're panicking because the market turned against you. Steenbark points out that recognizing when you're sliding down the curve is the first step to managing your emotions. For example, if you notice that you're feeling overly confident after a winning streak, that's a red flag. Because overconfidence leads to bigger risks, and bigger risks often lead to bigger losses. On the flip side, if you're at the bottom of the curve, feeling anxious or unsure, you're less likely to take good trades. Instead, you'll hesitate, second guess yourself, and miss opportunities. So the goal is to stay as close to the peak of the curve as possible, where your emotions are balanced and your decisions are sharp. A story to bring it home. Let me share a quick example that Brett talks about, something a lot of traders can relate to. There was this trader, let's call him John. John was a talented guy, great at analyzing markets, but he couldn't keep his emotions in check. After a losing trade, he'd spiral into self-doubt. He'd either stop trading altogether or go all in on a risky trade to try and make up for the loss. Steve Barker worked with John to help him understand his performance curve. They kept a trading journal, not just tracking trades, but also tracking emotions. Over time, John started to see patterns.
jueves.
He realized that after 2 or 3 winning trades, he'd get overconfident and increase his position size. That's when he'd start making mistakes. By identifying this pattern, John was able to adjust his behavior and stay closer to the peak of his performance curve. What this means for you. So, what does all this mean for you? It means that trading isn't just about what's happening on the charts. It's about what's happening in your head. Steve Barker's introduction teaches us that the market is a mirror. It reflects your strengths, your weaknesses, and your emotions. If you want to improve as a trader, you have to start by improving yourself. Here's a practical takeaway. Start keeping a trading journal. And I don't just mean jotting down your trades. Write about how you felt during each trade. Were you nervous, overconfident, stressed? Over time, you'll start to see patterns, just like John did. And once you see those patterns, you can work on breaking the bad habits and reinforcing the good ones. Trading psychology is the foundation of everything. Without it, even the best strategies would fall apart. Steve Barker's introduction sets the stage for what's to come in the rest of the book, a deep dive into understanding yourself as a trader and using that understanding to improve your performance. So, if you're ready to take your trading to the next level, stick with me as we explore the rest of the psychology of trading. Trust me, this journey is just getting started, and it's going to be worth it. The psychological challenges of trading. This section of Brett and Steve Barker's The Psychology of Trading dives deep into the common emotional and cognitive hurdles that traders face every single day. So, grab your coffee or tea, and let's break this down in a way that'll resonate with you directly. Ready? Let's go. Why trading psychology feels so tough. Let's be real. Trading is not just about numbers, charts, or strategies. It's about how you handle yourself in the heat of the moment. And that's where it gets tough. Steve Barker explains that the market is like a pressure cooker. It amplifies your fears, magnifies your insecurities, and tests your patience. Think about it. Every trade you make is essentially a judgment call about the future, and that can be terrifying. But here's the kicker. Your emotions don't just impact your performance. They define it. If you're stressed, fearful, or overconfident, you're more likely to make poor decisions. Let's dig into these emotions and see how they trip traders up. Stress, the invisible weight on traders. Stress is the silent killer of trading success. It's sneaky too. It doesn't just show up during a bad trade, it builds up over time. Steenbarger highlights that stress comes from two main sources of trading. One, uncertainty. The markets are unpredictable, and that constant state of not knowing what's next can eat away at your mental state. Two, risk of loss. Every trade carries the possibility of losing money. Even if you're okay with the risk on paper, the emotional toll of seeing a red number on your screen is real. Now, here's where stress becomes dangerous. It narrows your focus. When you're stressed, your brain enters fight or flight mode, and suddenly you're only thinking about survival. In trading terms, this means you're more likely to focus on short-term losses and gains rather than sticking to your strategy. Let me give you a quick example. Imagine you've had a rough week of trading and you're down 10%. The next time you see a setup, you're so stressed about making up for those losses that you jump into the trade without fully analyzing it. Sound familiar? That's stress sabotaging your decision-making process. Fear, the trader's worst enemy. Fear is another big challenge, and it comes in many forms. Fear of losing money, fear of missing out, FOMO, fear of being wrong, you name it. Steenbarger explains that fear often leads to two extreme behaviors. One, paralysis. You hesitate to take trades because you're too scared of losing. This means you miss out on good opportunities, and over time, your confidence takes a hit. Two, impulsiveness. On the flip side, fear can make you act too quickly. For example, you might close a trade prematurely because you're scared of a small pullback, only to watch the market move in your favor afterward. Here's the thing. Fear isn't inherently bad. It's your brain's way of telling you to be cautious. The trick is to acknowledge it without letting it dictate your actions. Steenbarger emphasizes that successful traders don't eliminate fear. They learn to work with it. Overconfidence, the silent saboteur. Now let's talk about the other side of the coin. Overconfidence. If fear is about being too cautious, overconfidence is about being too reckless. It usually shows up after a winning streak. You've made a few great trades, your account is up, and suddenly you feel invincible. You start taking bigger risks, ignoring your strategy, and chasing trades you wouldn't normally consider. Steenbarger calls this the euphoria trap. It's that feeling of invincibility that blinds you to the reality of risk. And let's be honest, this trap has caught all of us at some point, hasn't it?
Traders, manage the risk. The market will reward you. We are the stock market is
just happen to align in your favor. This kind of
game changer for a lot of us. Either long or short. If you manage your risk, you will be on the right side of the trade.
Trade has its own set of tricks.
At the end.
Steenbarger explains a few cognitive biases that traders often fall victim to. One, this is when you only see information that supports your existing beliefs. For example, if you're bullish on a stock, you might ignore all the signs that it's actually heading down. Two, recency bias. This happens when you give too much weight to recent events. If the market has been rallying for a week, you might assume it'll keep going up, even though the long-term trend says otherwise. Three, loss aversion. This is the tendency to fear losses more than
looking to see what that.
It's why traders often hold on to losing trades for too long, hoping they'll turn around, instead of cutting their losses early. Recognizing these biases is the first step to overcome it. Steenbarger suggests keeping track of your thought process during trades and checking for these biases. Over time, you'll start catching them before they influence your decisions. Practical takeaways for handling psychological challenges. All right, let's talk solutions. How do you manage all these emotional and cognitive challenges? Steenbarger offers some practical tips. One, create a routine. Having a daily trading routine can help reduce stress, keep you grounded. This might include reviewing your strategy,
all my indicators are out.
taking breaks.
Let me see if I find a
Journal your
different
trades.
one.
A trading journal isn't just for tracking numbers, it's for tracking your emotions too. Write down how you felt during each trade and look for patterns over time. Three, Practice mindfulness. This might sound a bit out there, but mindfulness techniques like deep breathing and meditation can help you stay calm and focused, especially during volatile markets. 4. Set realistic expectations. Don't aim to win every trade or double your account in a month. Unrealistic expectations lead to stress and overconfidence. Instead, focus on consistent, small gains. Here's the bottom line. Trading isn't just a skill, it's a mental game. The market will test your emotions, exploit your fears, and feed your overconfidence. But the good news, you're not alone in facing these challenges, and they're not insurmountable. By understanding your emotional and cognitive tendencies, you can start to manage them efficiently. And remember, every great trader has faced these challenges. What separates the pros from the amateurs is how they deal. So take this as your reminder. Next time fear or overconfidence creeps in, reflect and get back to your strategy. The role of personality in trading. Have you ever wondered how your personality shapes your trading decisions? Well, buckle up, because this is where things get fascinating. Break it all down in a way that hits home. Why personality matters in trading. Alright, let's kick this off with a fundamental truth. Trading isn't one size fits all.
Steve right now. I'll mark the upside of it. That first 1,000 lot J's in opening call with Bill, that's 604 in the orders. It did, yep. For one.
Alright, caveman trade and see if we can take out that liquidity up there.
Yeah.
J-Long is the long side.
Good. My caveman trade was saying section 550s, the 597s, and VES literally just work the 6002s. 5-point plan, 5s.
200 on the offer now.
Yeah. When you see those large orders, please explain what the trade would be. Well, the idea behind it is the market will go seek that liquidity. The market will go fill that order because we're just right now.
I got long one for it.
It's worth go to. Well, the lower we did is about 6 points away. No. Because what price I get?
It's worth it. It starts getting like pocket out.
We want to see if it's out liquidity, right?
Yeah, but then take it out. These are all singles trades. These are all basic trades. Or full run trades.
Going for it.
And
Go for it.
no. You feel too?
So,
All right, 6,000 in the last trade, 59.99 now trade.
one on.
Okay, that trade's working right there. Don't overthink it, just boom, in, out. So you can come back in, see, just play that trade on repeats. The price we get, Jack, or where we lost from.
Wait 1 second, I gotta this trade. We're still long with one. I tried to do what was working. We might have scratched with this little trade here. Let's see. Yeah, you still like the long side?
For the day I do check, yeah. I was looking for buys at 92s. We didn't get down to my entry, but yeah, I do still like the long side.
Okay, let's be direct.
Sure is. Let's see if it goes to NASDAQ. See if S&P's want to follow as well. How's it got long one? Yes, so 6001. 6001. Don't overthink it.
Right, I took off this caveman trade. Maybe two bucks.
Sweet.
What I was doing, it got me tongue-tied there, Fred.
Yeah.
Then I added another buy limit right in front of the order, seeing if they gone through it. It really didn't. Took that order out. They had the order taken off. And it just kind of reversed right there.
That's good.
I'm with Jay in that, maybe like lost for the day, but also my wits came to me. I was thinking, well, shouldn't be a trade that we might do.
Well, if I'm gonna listen to Top Step, I might as well go to the ES.
Stealth way. Have the account with some big moves coming up here. Morning, buy coming in here in the NASDAQ.
But I'm not.
So good plan D, Tony says. side, oh my God, 60 dollars should have. So it's 60.06.
I like handle, had the present comments, it was right at 6,009 and a half. So I do like that trade management there where we cut it or trail, because that's where sellers come in, right? So if they continue to sell there, then, we go right back down into that range. So nice, but if we, at this point, it feels kind of late to take a long, but if we start to hold on 9.5 and use it as support, I'll take a long to 20.
70% long, the NASDAQ.
Okay, let me tell you what I have here.
So, I was about to say, we were coming on the NASDAQ right into the spot yesterday, where buyers were getting absorbed, and eventually that big reoffer came towards the latter half of the day and sent us down for that second side of that trend day. So I was curious if sellers were going to show up again, and so far they are. They're around the 21,400
level, and then here, for my previous sell.
We have the volume profile right there. Volume profile right there. Volume profile right there. We have the Bollinger Bands right there in red. In red. The yellow one. The yellow one.
Below there. So we sell. Like, things there's low risk on it. Goes.
Yellow one is the 20 moving average. EMA 20 moving average. Wait up. It's right here. Right here. This yellow line right here is the 20. Correct. And then the red, this red right here and this red right here are the Bollinger Bands. The lower and the upper. What the hell is this? This white one here is the 200. All right. This one here, you see that blue one? That's the 50 EMA. This red one here is the 9. 9. This is the regular BWAP right here in purple. Purple. The flashing. And then the top step levels. Top step levels. Top step levels. And then the volume. And that's that. Wow. This is dropping. Nicely dropping. We come in here. If we come here and rebound, maybe. We are at 941. We had news earlier at 8:30.
27 is the 5% off the all-time high. The only one's looking at that.
I was trading my practice account. I lost about 1,100, and then I rebound and I got it up to, let's see, 175 from 1,100 loss. And I traded it last night. I trade gold short, and it was about 700 plus, and I lost that and plus more, but I got it back to green. Damn. Tempting to go because it's coming here. Coming here. First, this is a level. This green one here is a level. We'll see. Let's see what level is that. The green one is, oh, not that one. Is this an, let me see, is this one of my lines or is this one of the levels? Yeah, it's one of the levels. Yeah, it is yesterday's value point of control. This green one here, right here. We just went through that, and I said it. We were coming here. Look at that. So let's see. This purple one is the yesterday's low. Yesterday's low. Let's go in.
Order filled.
Oh, let's give ourselves a chance. Nope. Nope.
Order
Reverse.
filled.
Oh, crap. Crap, crap, crap. Crap, crap, crap. Can we come here to, what is this? What is this? Yesterday's low, and we just hit yesterday's value area low, and yesterday's low is right here in the purple. Oh no! We're losing it, baby! We're losing it! Oh my goodness! What's going on here? You're not playing with me! Oh crap!
Order filled.
Okay, we're out 469. 464 on the real account. And that's how it rolls. Now waiting for 9:45 to close. Real 50K combine. And let's see how we are on the other one, 290. Unbelievable.
Time. Distribution here. Market open between multiple distributions, more so in the S&Ps than in the NASDAQ, but the market, NASDAQ took a look at the IB high from yesterday, and now it's probably going to go down and look for some sort of buyers down in the area of the lower distribution from yesterday. So the S&P is more is a low distribution trend day. So you have, you can see the volume profiles here. You have market open, held up here for a while.
Instead of taking 400, picture that. So that box is the 15-minute opening range.
at possibly looking at the upper and then there is a probability that once it does that, it's
I had it right the first time. I just took it off. Watch. Put attention. I had it right here. I had it long at 2010. Where are we now? 2004. So I would have been about even. But no, I had to play with the devil.
Order filled.
Oh, crap. Check this out. I didn't even press the button.
Order filled.
I didn't put cancel or cancel.
Order filled.
I was sitting watching 90s. Couldn't pull it. Yeah, I wanted high too, but then I kind of hesitated on it, so I'm at 82.75, a little bit late to this. Risk is above 80, and risk definitely needs to go high. Kept watching if we were going to come in 2094. VWAP was right there. The 24-hour VWAP usually did not pull the trigger. But look, we're getting thrown around the wire right now. Let's take Nasdaq 21,179, low of day 165. Bulls put it to new lows at 28.79 last trade. Low was 81. Four stars come in with Nasdaq. I'm sorry, the S&Ps as well. Bottom out the S&Ps 59.77. Any particular did you get in? Missed the edge. No, I wanted a little higher, and I was kind of just waiting. We pretty much just wicked off like 90, and then fell back down to the lows here. But man, looking at even like from last Friday to now, you're seeing sellers continue to step in and reoffer honestly lower prices continuously this the last 5 sessions. So that's I guess with Nvidia not being able to kind of be the catalyst to push us out, even what's it quarter or PC, whatever preliminary came in today, a little hotter than expected. We'll see what the actual one tomorrow is. There's just not a lot of positive catalysts right now in this market to move us back towards these all-time high. I'm looking for. I may cut this for a scratch if this doesn't go like right now. That's going right now. Oh, let's go.
Order filled.
Upper left hand corner of the screen. Hashtag fast markets. Hashtag fast markets. Hashtag power hour.
Make sure I cancel. Oh.
And then, like you said, that should have been the trade. We didn't get all the way back up there. That should have been the trade. And then it was a burst of selling that came in. I just kind of drawn them. Volume basement. Well, yeah, selling coming in. 59.74. Last trade in the ES. 21,151. Open. Welcome. Oh, also click subscribe. We're about to get to 148,000 subscribers. It's by today, but right now we're focused on these markets. Rocking and rolling today on TopStep TV. Let's get that last whistle. Minders. There's this. 40,000 subscribers. Guys. No, let the follow subscribers. Oh, wait a minute. 59.77 last trade. Buyers fight here yesterday. Down here.
A 7 minutes on this.
And 77% short to ES. Short right now. Top of the hour. Bars as well.
A 7 minutes on this.
We're in for one hell of a day. One hell of a week. Right on that till
Order rejected.
Fucking nervous as hell. This is my tray right here. Told you what's coming here. I gotta do 3, man. I gotta do 3. No, I'm not doing like that. Let's see what the 5 is doing. It's gonna do it.
Order filled.
Come on, 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 come
Order
on.
filled.
There we go. Coming here, it's coming here. It's coming here, it's coming here. Where we coming to? 53.
Order filled.
Come on.
Order filled.
Okay, good. For you, good for you. This is doable. Need a new headphone. So let's see where else we going. There's no more. No más.
Order filled.
Oh my goodness, I didn't do that. Cancel.
Order filled.
I didn't do that. See, I didn't close my trays. Where we going? Let's look at the other. Oh, we are. $29.20. Oh my goodness. How do we trade this? How do we trade this? Man, I could have gotten all my money back. I hate coming from behind. But it's my fault. Gotta know what you're doing. Especially every day now. Oh! We going long the next one. We going long. We're going long the next one. Let me see. We lost $6 on the fat finger. That's because I didn't press cancel and flying on.
I'm not gonna chase this yet. I'm just gonna wait to see if there's a short covering pop, something to reoffer. Yeah, man, that 90 shorts, it's sweet.
I'm gonna cancel. I'm gonna cancel this till I see a viable. Oh, more news. I'm gonna do this. See, yeah. Okay, so we're gonna close this for now. Where were we? 9:59. We're gonna close this. That was that.